Well, thanks so much for tuning into this earnings conversation with Sanghvi Movers. Their Q2 numbers looked impressive, 28% uptick in revenues, margins from a 52% base, which is not small, expanded to 61%. As a result of which the net profit up 28%, also because the other income was down significantly. Else, maybe the net profit numbers could have been better because of the margin expansion as well. Capacity utilization levels have moved up. Order book has swelled too. Let's get in the management to talk about this numbers. Mr. Sanghvi joins in. Great having you. Thanks for taking the time out. Can you tell us what went right for the margin expansion to be as strong as it was? And when you reflect upon H1 and the kind of growth that you've shown, how does this, what does this mean for the next 2 to 4 to 6 quarters?
Hi, good afternoon, and thanks for having me. So we've been doing a lot of work to improve our EBITDA, both on the top line and the bottom line. So at the top line, we've been focused on utilization. We've been consistently showing higher utilization these past few quarters, and this is primarily because of the infrastructure growth story that India is experiencing right now. The other factor that we've played with on the top line is the average blended yield. So our yields are now holding up beyond 2% and above. And this is primarily because there is this tremendous demand for cranes, and we have the largest fleet in India. We're the sixth largest in the world. And so we've been able to cater to the demand in a more effective manner. On the expense side, we've done a number of cost optimization initiatives and digitalization, which has helped us expand our margins even more. Now, going forward, we expect the India infrastructure growth story to continue to play out. The government has announced a 10 lakh crore infrastructure investment, and this is about 3.3% of the GDP. We see that this is going to have, therefore, a huge impact on our business, and all core sectors are going to be firing on all cylinders. So we see tremendous amount of demand for cranes going forward, where we expect our utilization levels to remain consistent, while we try to better our yield and therefore better the margin and our top line at the end of the day.
Got it. Rishi, one quick question though. Relative to, I'll come to growth, but relative to the quarterly or the annual run rate that you have, yes, there has been an uptick in the order book, but the book to bill, as we like to call it in a lot of companies, doesn't look very high. Now, is this the nature of the business, or do you anticipate that with the infra story that you spoke about, with the power story which I want to quiz you about, that these numbers will move up going ahead?
So look, our top line has grown in H1 as compared to the last year, and we definitely see directionally that we will be adding our order book as on date is 522 crores. So this includes the H1 numbers as well as what needs to be built till March 31st. So we have definitely crossed our top line for the previous year, but we expect this to improve in the balance 6 months of this financial year. So we're confident on our numbers in terms of how the order book is looking, and we see tremendous amount demand for cranes coming through all sectors.
Yeah, no, so I'm just trying to understand the nature of the order flow that comes to you. Will it keep on coming in small batches, or does it happen that because of the initiatives that the government has taken, that you expect substantial amount of order flow to come to you over the course of the next 6 to 12 months? You are the largest in the country, I presume, if you are the fifth largest in the world. So how does the order flow happen in an industry like yours?
Right. So these are capital intensive projects, basically core infrastructure projects. So the demand for cranes, comes to us in a budgetary stage almost a year in advance. And then before the project offtakes on the ground level, most of our contracts are already locked in. So we have order visibility going up to October 25. Some of our order book is built up to March 25, and some of that being extended further. So order inflow comes based on how projects have been announced what stages they are in, whether it's in environmental clearance, financial closure, whether the necessary approvals from the government have been received in terms of power offtake or licensing for mining, etc. And generally, our order book gets built out well in advance. We have a good order visibility, and it's throughout the year. So if we are
Got it.
executing orders today, we have secured those orders a couple of quarters back, and in today's quarter, in the third quarter, we'd be looking at orders for the next financial.
Sorry, I'm just trying to understand then. If you have, and correct me if I'm wrong, but your order book is at 522 crores as of now, as things stand?
Yes.
So if I look at your current revenue, and if some part of that order book is stretched or orders even up till October 2025.
So 525 are the orders till March 31st. So we
Okay.
don't disclose numbers for orders that may be there in future for future quarters.
I get your point. Okay. So, okay, I get your point. And would these orders that you are talking about be more or less at similar kind of operational metrics that you've now started displaying, let's say in quarter two?
Yes, we do believe that the utilization and yield, which is what drives the top line, can be maintained, and that is what the management is going to strive to do. Because as I mentioned, the demand for cranes is very high, and there is a shortage of cranes in the industry right now. On the expense side, that's our USP. We've been around for 35 years. We have 3 decades of operation. So, we're going to continue to optimize our operating base, our cost base, and sort of deliver that same level of EBIT.
Got it. Which is great work. The other aspect, I just heard you say in one of the earlier answers that the 525 crores to be executed till March includes the execution already done in the first half, or is it over and above that?
Yes, that's right.
Okay. So net, if you've done about, let's say 286 odd crores in the first half, you expect a similar revenue outlay or performance in Q3 and Q4 as well, more or less.
Right. Yes, we do. And historically, Q3 and Q4, if you were to analyze our numbers, Q3 and Q4 are our best quarters. So we do believe that we improve on H1 in H2.
Got it. Just one more slightly academic question, but the commentaries from some of the wind power companies about the kind of additions that will happen and the kind of order books that they are executing now and expect to get beyond FY25, the numbers are to be heard, to be believed. Does all of this or a material part of it translate into good business for you, and do you anticipate that to happen post FY24 as well?
Most definitely. So the renewable energy sectors, particularly in wind, has a lot of traction right now. There's a lot of demand. One is that we have on a public forum on a global stage announced our renewable targets, and the Honorable Prime Minister has been very vocal about these targets. So the entire country, from the government side, from the private side, and the entire ecosystem in the renewable wind energy has started gearing up to deliver on this commitment. The other factor that is driving this sort of growth is that all large corporate houses have ESG requirements to reduce their carbon footprint by 2030. So be it the JSWs, Adani's, Reliance, Aditya Birla, all these corporate houses have a gigawatt plus platform on an annual basis that they need to do, Serentica, etc. So there is a dual factor in place right now, which is the government's commitments on a global stage as well as private sector requirements to reduce their carbon footprint. The third factor that's driving this sort of demand is the basic need for power. And a lot of power is being sold to what we call as the commercial and industrial sector, where there are private power purchase agreements between the renewable energy developer and the end user. So all of this is leading to a tremendous amount of demand for wind power. And we see anywhere between 4 to 5 gigawatts of renewable wind energy power being added this year, next year, and it's just going to increase from there on.
Got it. in which case, my final question to you, Rishi, which is, when I think of the largest crane player in the country, and then I think of the opportunity size out there, and think of the kind of growth plans or the vision that they have for the next 3, 4, 5 years. We've spoken about the quarter. Can you tell us about, as you, somebody who's leading this company currently in the midst of all of these triggers that you spoke about, what do you envisage Sanghvi Movers as a business to be like 3 years out, 5 years out, from where it is right now?
So, I'll talk about what we've done this year and, in what direction we've headed. So this year, the board has sanctioned anywhere between 3 to 400 crores of capex, of which we have already executed 250 crores, and it's already adding to our top line. So in terms of growth, we will be investing in cranes going forward, subject to the approval of our board of directors and the demand from the market. Currently, we own about 60%, 60 to 65% of all the renewable wind energy that is installed in the country is done by Sanghvi Movers. And, as that piece increases, we want to retain our market share. So going forward, we envisage ourselves doing anywhere between 2.5 to 3 gigawatts worth of renewable wind energy installations in the country. And that in itself for us is a massive opportunity. So our growth story is linked in a way to not only the renewable energy sector, wind energy sector, but also the infrastructure sector. And there's a lot of movement in thermal power. There's 25 gigawatts of thermal power being built in the country. There's massive expansions in greenfield and brownfield projects in refineries. Steel is another sector in which there are about 13 million tons per annum. In cement, there's about 100 million tons per annum of capacity addition that's taking place right now. In every single tier 1, tier 2 city in the country has a metro project that is being constructed. So there's sufficient demand for cranes across the country. There's sufficient growth and in the infrastructure space. And going forward, what we want to do is capitalize on that opportunity, maintain our market leadership, and continue to deliver the kind of margins that we've been looking at.
But just before we wrap up, just in order to understand, what is the current wind power execution that you're doing currently? Because I heard you say that you envisage yourself doing maybe 2.5 gigawatts. What is it that you do currently?
So I think this year is a transition year because last year we did about 2,000 megawatts. I think this year we will do 3,500 megawatts as a country. And a lot of infrastructure is being built around delivering that 3.5 gigawatts. So substations, evacuation lines,
Sure.
sites, government approvals, things like that. But going forward, I think anywhere between 4 to 5 gigawatts on average per year is going to be the bare minimum. So this year, 3,500 megawatts of that 60% is going to be installed by Sanghvi.
Okay. So it's not. I mean, you growing at a steady pace for the next 2, 3, 5 years is what you seem to be suggesting. Is there a target in mind? I mean, that you want to reach a particular size by a particular year or something? Is there a vision statement or something like that?
So there is, but it's very internal, and it's something that as a strategy we are working on internally. But right now, I'd just like to say, as infrastructure is growing, so would Sanghvi Movers' role in that infrastructure. And our objective is, to grow, but at the same time deliver the similar kind of margins that we've been experiencing.
We wish you all the best for that, to you and your team. Happy festive season, happy Saal Mubarak, and thanks so much for joining us today.
Thank you. Thank you so much for having me, and happy Diwali.
Thank you so much. And viewers, thanks for tuning in.
Good morning, all the viewers of BQ Prime. It's always an honor and pleasure to interact with you on this forum. And today is a very different day. It's not about our businesses. It's not about our margins. It's not about our portfolio growth. Rather, it is the time to start celebrating Diwali, start celebrating the festive season. So wishing all of you all the very best, the best of health, best of prosperity, and best of anything else you dream for, and hopefully with all the best that you get, you come and celebrate in your Taj and other iconic assets of Indian hotels. We look forward to serving you. We look forward to hosting you. and we wish you the very best from all of us, your team at Indian Hotels.